Right. So today's discussion is all about identifying the ultimate parent entity, and we will also learn about identifying the intermediate parent entity. Now, quick question to ask is, why is identification of ultimate parent entity important? It is important because they are ultimately the people who would be paying top up taxes. Okay, income inclusion rule applies to them. So if a constituent entity has not paid 15% taxes, then or the effective tax rate is not 15%, the top up tax through IIR has to be paid by the parent entity or the ultimate parent entity. So in such a scenario, it is very important to identify the UPE. Okay, and in various structures there could be confusions as to identification of UPE. Okay, so the whole what is the giveaway from this today's discussion is, after completing this chapter, you should be able to identify the UPE of the MNE group and understand the roles of IPE in the group framework. So we will be looking at all of this today. Okay, can you give me a thumbs up if that is clear? Oh, fantastic. Right. So, absolutely, the question is, what is a UPE? What is the definition of UPE? We'll understand the definition so that it's easy to identify. Okay. So, what is UPE? The ultimate parent entity, or UPE, is the entity at the top of the MNE group that owns directly or indirectly a controlling interest in any other entity of the group, and it is not owned by another entity with a controlling interest. Okay. So how you can spot a UPE is, it owns directly or indirectly a controlling interest, not just any interest, a controlling interest in a constituent entity, in another entity of the group, and it is not owned by another entity with a controlling interest. Okay. This definition is very important because we would be using this definition to understand or apply the UPE structures going forward. Okay, so you should own a controlling interest in another entity, and you should not be owned by another entity with a controlling interest. Okay, so in simpler terms, UP is the entity that consolidated all other group entities and is not itself consolidated by another entity. So if you look at the consolidated financial statement, the consolidation financial statement basically would be made by the UP. Okay, now why is this definition very important? This definition is very important because it ensures that there could only be one UPE per revenue, right? So if we apply this definition that it controls other entity but it is not controlled by any other entity, would ensure that there is only one UPE who is responsible for paying the IA. Clear? Now let's identify step by step how to what would be the step by step process we will use for UPE identification. Given that that is the definition, we will look at step by step method. First is, start with the consolidation entity. Now, if you are given an MNE group, you start with the consolidation entity. Identify which entity prepares the consolidated financial statements used for revenue threshold test. Who prepares consolidated financial statements would normally be the UP. Okay. For the whole group as a whole, who prepares the consolidated financial statement, that would be the UP. Now, verify that there is no higher level consolidation and just confirm that that consolidated, that entity which is preparing the consolidated financial statement is not a subsidiary of another company, or is there is no parent that consolidates this entity, or there are no trust foundation or fund structures about it. It could have individuals holding it. Okay, but it should not have trust foundation or fund structures holding it. Why? Because, as explained, trust foundation or fund structures are also a constituent entity, right? So that means it would be held by another entity. So you have to really see that, okay, this consolidation is not a part consolidation, but it is the ultimate consolidation, and the consolidated entity is not owned by another entity. Clear? Now, once you do step 2, step 3 is, the definition has two parts. First part of the definition is, it owns a controlling interest in another entity, and it is not owned by. Now you ensured that it is not owned by another entity in step 2. In step 3, you have to verify whether it has a controlling interest in another entity. Now, what is a controlling interest? Controlling interest is also given a proper definition in Article 10.1. It means ownership of not more than 50% of voting rights. That means ownership of shares, control over the entity's board or management. As usual, this is very, very difficult to establish. You know that. I mean, this is not a definition that is given, first time, because this is the definition we use for transfer pricing as well. So when does anybody have controlling interest? It has ownership of more than 50% voting rights. It has control over the entity's board or management, or it has entitlement to more than 50% of the profits. So if any one of these three conditions satisfy, since it is given by or, it means that the UPE has a controlling interest in another entity. Okay. So you do these three steps on a practical framework to identify or apply the definition we learned in the first slide. Is that clear? Okay. So if the entity at the top holds less than a controlling interest in all other subs, if controlling interest is not established, two conditions are not established, then it may not be the UP. You have to reassess the group structure, apply the three frameworks again and again till you find the UP. Okay. So just a brief summary. What is the UP? The definition definition says that it is the entity which owns at least which owns a controlling interest in at least one other entity of the group. Now, what is a controlling interest? It is ownership of more than 50% voting rights, control over the entity's board, or entitlement to more than 50% profits, and it itself is not held by another entity. So you have to confirm that, we have to first start with the consolidation entity, verify that there is no higher level consolidation, even there is no trust or any other person who's holding this, and also if it does not satisfy the two conditions, then you have to reassess the group and find another UP. Somebody else is going to, you have to identify the entity in the group which satisfies these conditions. Then only we know who is going to pay the top tax. Okay, clear? Okay. If there is any question, you feel free to stop me, raise your hand, or prompt me in chat, and I will definitely get to that. This is quite straightforward. Now, what are the common UPE structures? First structure is normally the UP would be a listed entity, correct? The one at the very top would be a listed entity. Then if it is the listed entity and if it prepares consolidate, it is very easy for us to identify who the UP is. Okay. It could be a private holding company also, a privately held company that owns the whole operating group, and that private company prepares consolidated accounts, and that is the UP. So these are just scenarios who could be the UP. I mean, it is not given that it should be a listed entity. No, it could be a listed entity, it could be a private holding company, it could be a trust or foundation also. Okay, when a trust or foundation sits at the top of the structure and controls the group, it may be the UP if it prepares the consolidated financial statements. Okay, so you have to be very clear with who exactly is the UP. And in the constituent entity chapter, we established that trust or foundation can be, or transparent entities or flow through entities can be constituent entities. They can be a UP also. Okay, now if it is ultimately held by an individual, or it is by a family or a group of persons, okay, where individuals or families own the group directly without any interposed holding company, the highest entity that prepares consolidated statement is the UP. The individuals are not constituent entities. So let's say, if ultimately the UP is owned by individuals, then individuals won't do consolidated financial. It's only the UP that prepares. No? So that the highest point where the consolidation happens, that is the UP in that avenue. Okay. So whenever you are given an M&E group, look at the structure, which if ultimately it is owned by individuals, then you have to see which company is the one which prepares the consolidated financial statements. Okay, the one which the individuals holds would be the one which prepares consolidated financial statement. The highest entity that prepares CFS, that would be the UPE. Okay, so just because you are having an individual set off does not exonerate you. If you have subsidiaries, then also you're coming into the network of pillar 2. Okay, clear? So all the structuring that is done where, like, I change my ultimate holding company to individuals, or the group structure starts from there. Okay, so let's say individuals hold 100% in company 1 and company 1 holds 100% of company 2, 3 and 4. Then company 1, 2, 3, 4 is an NMND. Okay, fantastic. If that is quite clear, then let's move and understand what is an intermediate parent entity. Okay, or an IPE. Now, what is an intermediate parent entity? An intermediate parent entity is a constituent entity that owns a controlling interest in another constituent entity, but it is not the UP. Okay, so let's say that there is a structure where there is company 1 holding 100% of company 2 is holding 100% of company 3. Then let's look at company 2. So company 2 is holding controlling interest in company 3, and it is owned, it is not the UP, because company 1 is the UP. Getting it? That is what we call as an intermediate parent entity. It sits in the middle. Any doubt in the definition? Yes. Okay. So why are we talking about, if I have already told you that it is the UPE which is going to apply the IAR. So why are we talking about the IP? What is the whole relevance of IP? Let's understand. Yes. Why are they important? So first thing is, sometimes what happens is the UPE's jurisdiction does not apply the IAR, because they are in some Bermuda, or they are in some any other country which does not have a pillar 2 framework. Then the owners will come into the IP. The IPE would have to see what are the constituent entities inside it and has to apply IIR. Okay, that is why, and we have to identify IIR also. Now, of course, some jurisdictions, what happens is, if you are an IPE, then you would have to do separate filing. So that's also there. So it is very important to see whether you are an IPE or not. What is the definition? How do you identify an IPE? IP is one who's not the UP of the group, but it holds controlling interest in any other entity. Okay, so if you are an IPE, some jurisdictions would have a local filing requirement also. And of course, top-up tax allocation may flow through IPEs in the ownership chain. We will talk about top-up tax allocation in the next week, okay, when we talk about charging mechanism. But you understand that, this would be clear in next week. But you understand that major reason why we are identifying IPE is because if the UPE is in a jurisdiction which does not have any rule on pillar 2, no domestic rule, or they have not signed a treaty network, then it is up to the IPE to collect. So that's a backstop mechanism. Even if UPE is in a jurisdiction which it does not exonerate the group from pillar 2 taxation at all. Understand? Is it clear? Okay, fantastic. So how do you identify the IP? You tell me, what are the step-by-step basis to understand the UPE? What are the steps I told you? You look at the consolidated financial statements, and who prepares the consolidated FS? You take that entity, and that entity you will see whether it is owned by any other person. If not, you have to see if it has a controlling interest in any other person. If it satisfies the two conditions, then it is the UP. How do you identify the IPE? What are the steps if we go by the similar nature of things? What are the steps by which you will identify an IPE? So, from the constituent entity register, this is practical. Okay, you have to identify entities that are owned by another constituent entity, and you have to see if it owns a controlling interest in any other. So, which is the document you will look at? You look at the constituent entity register. Who prepares the constituent entity register? We, at the time of identifying the constituent entities. In the last class, I told you, as a part of documentation, you have to maintain a constituent entity register. From there, you find who are the IPEs involved. Okay, we'll do an example, don't worry. So what is the key role of IP? It is a critical backstop. It's pretty straightforward, because if UPE fails to apply a qualified IAR, then the top up tax has to be collected and by the IP. Otherwise, it would be lost. If the UP is in a jurisdiction like Mauritius or somewhere else, or Cayman Islands, which does not have a pillar two, then it's gone. Then we can't tax the whole group. It's a big loophole. To avoid that, they have told us to identify IPE also, and IPE should implement if UPE is a jurisdiction which does not have IAR. Is that clear? Yeah. So we will quickly, do a little like, this is a group structure. Okay. Yeah. So in this group structure, there is AR, which is incorporated in UK. It is holding 100% in AQ Limited. It is holding 100% in RRT, which is in USA, and it is holding 100% in SA Australia, PTY, which is in Australia. Now AQ has other groups also. Now in this scenario, you first tell me, with our definition, this is the constituent entity register or a framework diagram. You tell me which is the UP. You can give it to me in chat. Which is the UP? Which is the UP in the group who would collect IAR, or who would pay the top up tax on IAR? Yes. Who's the UP? Sahil says ARCO. Yes, Sahil, 100% it is ARCO. But we need to apply this in the line with definition. Okay. So why ARCO? Is because it is, this entity owns a controlling interest in another constituent entity. There are multiple, at least one is what the definition. So it holds controlling interest in another constituent entity. At the same time, it is not held by any other entity. Okay, so that is why, by satisfying this definition, it is the UP. Okay, now you tell me, what is the IP? Now, given a scenario that ARCO is in UK, so let's imagine that it is in Cayman, or it is in a jurisdiction which does not have pillar. Now, the IAR has to be collected by IP. Who's the IP in this scenario? What is the definition of IP? IP is an entity which owns a controlling interest in another entity, and it is not the UP. Correct? So, who's the IP here? So, Melvin says AQ and RRT. Yes, Melvin, that is correct, because you have to see who's the immediately the next guy. Okay. Now there won't be one IP in the group, rather there could be multiple IPs in the group. The example is just to clarify. So if AR is in a jurisdiction which does not apply IAR, then the owners will fall to IP. IP, who's the IP? Who holds a controlling interest in any other entity, but it is not the UP. So AQ is not the UP. It is held by AR, right? But AQ holds controlling interest in AQ Germany GmbH, AQ France SAS, and also AQ Netherlands BV. And so this is the UP. Is this a UP? Yes, it is also having, it is holding controlling interest in RRT US. Is this IPE? No, because it is not having controlling interest in any other company. Getting it? So, in case if AR is not in a jurisdiction that applies IAR, then who all will collect top-up taxes? AQ will collect top-up taxes if any of these companies are paying less than 15% effective tax rate. RRT will collect separately if this particular person is not paying 15% ET, and they will have to do the filings. This guy will file in US, this guy will file in UK. Are you getting the point? Yeah. If AR is in a jurisdiction, it's in UK. So let's say if it is in UK, then he will collect in terms of everybody and pay in UK. Okay. But if it is only, if it is not in jurisdiction, then these two have to do separately. This guy will not do because he does not have controlling interest in another entity. Is that example clear? Yes, if you can give me a thumbs up. Okay, you know how the IAR will flow, why IPE and UPE is identification is important. Okay, perfect. So let's move forward. This is why you have to understand the definition of it. Now, there are certain instances where it is a little difficult to find, or like where the normal definition will not. So it needs a little explanation. Definition is very clear about UPE and IP. Definition is absolutely clear, but there could be instances. So sometimes there is something called a multi-parented M&E group. Now, what is a multi-parented M&E group? Multi-parented M&E group exists when two or more entities that would otherwise be separate UPEs are stapled together or operate under a dual listed company arrangement. Now, what does it mean? What does it mean? Let's understand with the help of an example. Okay. So you know what is a stapled structure, right? I told you about two entities stapled structure last class. Hmm? Now, sometimes what happens is a group could also be in a stapled structure format. Okay. So what exactly happened? What I mean to say is there is group one. Okay, this is group one or M&E group one, and then there is M&E group two. Okay, two groups. But what happens is both the groups have the same let's say that they have the both the groups have the same let's say board of directors. They have the same board of directors and they have the same shareholders. Okay, and what happens is both the groups if there is a dividend decision and all, it would be taken uniformly. In substance, in legal terms, these are two different M&E groups, but they have the same board of directors, only one board of directors for both groups. They have the same shareholders and they have uniform dividend decision. This could happen, right? This could happen. Like same group would have and always like profit distribution, the same dividend etc. would be determined on the basis of combined profits, not on the individual profits of each group. On the combined profits, they would be having the dividend that would be declared. So, in such structures, how do you have to go about? The question is this two different groups or one group? In the stapled structure, while identifying constituent entities, even though two companies are stapled, I told you these are two separate companies, two separate constituent entities. While identifying whether they are an M&E group, you know this is one M&E group because it has a lot of M&Es inside it. This is also one M&E, but in terms of applying or identifying the UPE, you it would be seen as one group. Okay, it would be seen as one group, and it would be you have to identify only one UP. Then for this stapled structure of groups, there is only one M&E. Okay, one M&E only. You can't have two M&Es because these are two groups. Did you understand? Okay. Now I will tell you why they have specified like this. Okay. Now this is what is called a dual listed entity. Okay, two or more entities otherwise we separate UBs are stapled together or operate under a dual listed company arrangement. This is what it is. So, what is a stapled structure? You know, And what is a dual listed? It is like, it operate as a single economic enterprise, and contractual agreements remain the same. So let's say that there is one contractual agreement. That is a contractual agreement between both of them that says that, your clients are my clients also. We will not be sending in proposals as one group, any group one, but we will send as a group. That's what is happening here also. No, we send as one group, right? We send as one in even though there are a lot of entities. Let's look at it as MNEs. If there are multiple MNEs in the group, and but it operates as a single, they have a contract between them that it is kind of a we can send proposal as one, we will be doing the services as one, etc. Now, why have they told that if there is a stapled MNE group, you should only have one, not one MNE, this is one UPE. They would only have one UPE. Now, why is that? Is because I'll tell you. Why would you think that, you tell me, why do you think that if it is a stapled, there are two M&E groups which are the same director, shareholders, uniform dividend decision, both of them will be seen as one group, and there is only one UPE who would be paying the IAR in respect of both these things? Why do you think that there is a rule like that? Shouldn't it there be two UPEs, one for MNE Group 1 and one for MNE Group 4? Why does the law says there should be only one UPE, and all this would be considered as one MNE group? Why? Reason is, my friend, that if they allow these stapled M&E groups, let's say that in our organization we have different M&E groups. There is one company for auditing, one company for taxation, one company for corporate compliance, and under taxation there are two entities under that, one for direct taxes, one for indirect taxes. So that becomes an M&E group, right? Now, why have they say these will not be taken as two M&E groups or three M&E groups, but rather as one big M&E group? Is because if they allow such structuring to happen, then it is difficult that each one would have 750 million euros of scope, right? If it allows a loophole where I can split M&E groups, control it as one, but split M&E groups, and I will not be having this 750 million euros threshold. Yeah. And if I allow all these guys to kind of operate in solos, then they will not cross 750 million threshold individually, right? I can structure it in such a way that I would be out of the scope of pillar 2 completely. So to avoid that, if there are stapled structure M&E groups, then what they say is, boss, you're one. You're one. You would have one UP, and you have to collectively look at your revenue for 750 million, and one person has to see who are the road taxed constituent entities and pay the top tax. Getting it? Yes. So that is the whole rationale behind multi-parented M&E groups. It would have two different M&E groups, but the thing is, it's seen as one. Otherwise, that would be a major loophole for these guys to avoid pillar two tax. Okay. So I will just do a few questions. If company A makes a huge profit but pays 0% tax, and company B makes a small profit but pays 30% tax, why do you think the OECD insists on treating them as a single group rather than two separate ones? One thing is profit shifting, right? If one group is having 0% tax and another one is having 30% tax, I will shift the profit from this 30% tax entity to the 0% tax entity. Correct? So, boss, nothing doing. We will all be seeing this as one. It is not always effective in the sense that, let's take this scenario. Let's say parent one has a profit of $100, and they pay a tax of $20. Okay, so they have an effective tax rate of 20%. Would they need top up tax? Absolutely not, because their effective tax rate is more than 15%. Parent 2 in country Y, it has a profit of 100 and they pay a tax of 5. So they have a 5% effective tax rate. And what is the top up tax they have to pay? They have to pay top up tax at 10% now, which is $10. Yeah, this is scenario A. Okay, now scenario B, let's say if it is one combined group, then the total profit is what? 200, right? The scenario A is when these are two different MNEs. Scenario B is the total profit is 200 and what is the total tax paid? 20 plus 5, 25. What is the combined ETR? 25 divided by 200 is 12.5%. Now how much would I have to top up? I have to top up 2.5% to get to 15%, right? So I would be topping up 2.5% into 200, which is $5. This is the combined scenario and this is the individual scenario, right? So if I just tabulate that in separate groups, I would pay a total tax of 25. In combined also, I'll pay a total tax of 25. What is the top up tax I pay in scenario A? Here, I paid a top up tax of 10 because parent 2 is having a top up tax only having a 5% ETR. So I am recharging 15. So I pay a top up tax of 10. But combined, I pay only a top up tax of 5 and the total global bill is 35 and 30. See, combined it does not mean you will pay more taxes. You have potential to pay lesser taxes, but still they didn't allow them to be seen separately because 750 million threshold, because these guys will be completely out of the pillar 2 if you I see them as separately. So that is why they have told the law or the guidelines say that you have to see multi-parented M&E groups as one single group. Okay. Also, they may do loss offsetting. One part of multi-parent structure has a globe loss. That loss can be offset the globe income of another part of the structure, potentially reducing the overall top-up tax. Right. So this guy, let's say he's having a loss. I could do loss structuring also, correct, if they are two separate MNEs. And also if the IAR isn't triggered, the UTPR allows other countries in the group to collect taxes. We will talk about UTPR and all tomorrow, like in the next week. But the point is very clear. If I allow you to thrive as two different MNEs, having the problem is you will escape EUR 750 million, not be coming into the ambit of pillar 2 at all, even if looking at it together may finally reduce your bill, like even if there are potential that if I combine you will pay less taxes, but still they don't want to exonerate you fully, and that's why they said that even if the tax may come in special scenarios the tax may be less, still go with the combined framework and not go with a separate framework. Is that clear? Yes, making sense. Okay, so whenever you see a stapled M&E group structure, multi-parented structure, that's what it's called. In such a scenario, these are one entity for determining the UP. Okay, but in case of a constituent entity, like this is a constituent entity, whether there are two companies in a staple structure, these are seen as two separate companies. Okay, but while the UP for two M&E groups would be just one UP for, so that they don't go above the 750 million threshold. It's a little tricky, but you will get the hang of it. Okay, if you understand the rationale correctly. Okay, so how do you identify? Identify where there is a staple or DLC arrangement. Determine the combined group revenue. You have to combine the group revenue, not see them as silos, and designate one UP. Okay, how do you determine that? By means of reasonableness, or typically as per the group arrangement, you can nominate one UPE who would be collecting the taxes and map all subsidiaries of both parents as constituent entities. Okay, in case you get a multi-parented M&E group structure. Yes. And why is the UP determination important? I told you IAR application is done by the UP. You have to file the global, the return, the GIR has a income return has to be filed by the UPE and not by others. So like, that's where it is important. And UTPR exposure, like, UTPR and the other jurisdictions may apply. We will talk about UTPR like, in detail next. But let's say that there are changes in UPE status. Now, okay, we identified the UPE, we looked at multi-parented structures, and we identified the UPE. Now, if there are changes in UPE status, how could changes happen? If that UPE itself is acquired by another person, then it no longer satisfies the definition, right? It would be held by another entity. So if it is acquired by another person, then if the another company acquires the UP, the acquiring entities group becomes the new M&E group. The former UP becomes a constituent entity and reassess the scope at group level. Okay. So in case of a demerger which creates a new UP, then if there is a demerger, then each resulting group has to have its own UP. Okay. In each demerged group would assess the 750 million threshold separately. So do you, if you think that instead of a stable structure, let's demerger, yeah, but demerger is not very easy in practice. There is a lot of compliance that has to go in demergers. Okay, you have to kind of like split the assets between two groups. That is not a simple process at all. So if you want to save top up taxes, demerging is not a way. And what are the requirements you would take while in practical scenario? What are the requirements you would have? You have to have a UPE confirmation memo. Okay, you have to look at the group structure and identify the UPE, confirm the UPE, and note it down as a memo, as like notes to tax returns what we prepared. That's called a memo. A memo is short for memorandum. Okay, so you have to write entity name, jurisdiction, basis for UPE status in that memo. And IP schedule, you have to list the IPEs, which ownership chain. You have to take the group structure, visual representation of UPs, IPs, and all CEs. It's very handy if you create. And also IAR, whether UPE jurisdiction has qualified IAR. That is also something that if you can add, that would go a long way, right? So that is all about UPE, IPE identification. So let's break it down. First thing is, what is IP? Let's go to our diagram. What did we learn today? I told you what is UP. What is UP is clear. What is UP? UP is one which is the consolidating entity, or in the textbook definition, it is an entity which holds a controlling interest in another entity, but it is not held by another entity. Okay. Now, why is UP determination important? Because that is, let's, okay. So, first one is, what is UPE? We discussed. Why UP determination is important? Yes, because that is the one who is actually paying the top up taxes. Then we learned about IPE. What is IPE? IP is intermediate parent entity, an entity which holds a controlling interest in another entity, but it is not the UP. Why is IPE important? Why identification of IP is important? It is important because if the UP jurisdiction does not apply in IAR, then IPE has to apply the IAR. Okay, and IPEs could be multiple in a group. It is not one IPE per group like a UPE. IPEs could be multiple. So you are responsible for your own tiny group. Okay, we looked at the definition of AR, AQ, SA, and RRT there. Now, then we learned about a little exception when there is a multi-parented group. Okay, so what does it mean? There are two groups with two UPEs, but if it is a multi-parented group in the sense that it has the same director, shareholders, uniform dividend decision. End of the day, it is basically both are seen as the same. It has a contractual. It's called a dual listing contract. A contractual agreement in place between them. There, you will invoice as one, you will work as one. Everything is one. But end of the day, just for the legal basis, there are two. Then sorry boss, you would not be seen as two groups, but you will be seen as one group. Because if I give you leeway to see as two groups, then you may not satisfy the 750 million euros separately. Okay, so that is why multi-parented groups are one MNE, or not one MNE, rather, like they will only have one UP. Okay, then what did we discuss? We discussed like special cases. as in like when UPE is acquired, when the UPE is acquired, it no longer becomes a UPE. Then the acquiring companies, the group expands, and the acquiring company, you have to find a new UPE. Okay, because it no longer satisfies the definition of a UPE. When there is a demerger, then there could be two UPs, right? The two new groups which are demerged would be seen as two different M&E groups, and they would have their own separate UPs. Okay. Then we discussed about documentation requirements. Documentation requirements are what? Number one is you have to have identify the UPE and prepare a memo for that. Then you have to identify IPEs. You have to have a visual representation of who is the group, and also it is very important that you include if the UP that you identified is in a jurisdiction which accepts, which has IAI, which has a qualified IAI. Is it clear what is learned today? Yeah. Why UP? What is UP? Why UP is important? It is very important. Okay, I mean once you get the hang of it, that's when you can apply the scenarios and case studies going forward. If there are any doubts, anything, just let me know. There are few chats. So if there are any doubts, like if there, you need any clarifications on these, like let me know. But this is what we learned. These 8 points are what we learned today. Okay. If I'll just wait 1 minute for any doubts. If there are no doubts, let's move it. There are no doubts. Just give me a thumbs up so that we can move it. Okay, cool. So that is about today. Thank you, Jashnu. That's very visible. So that is about today, and tomorrow we that is chapter 3. Now tomorrow we will go to chapter 4, and once it's not chapter 4, rather it's chapter 1.4. Once tomorrow's chapter is also over, we complete first chapter, which is the scope, and then we will do an assignment so that we are very clear with what we learned and how to apply these. Okay, so see you tomorrow, guys.